After a couple of weekends, today we start the things again. And in this particular spell, I just want to give you a practical aspects of these things. And I think we have gone through a comprehensive theoretical course for the last couple of weekends. But this time I just want to give you a practical sense of it. So I think that is the most important thing. It is very, I am very happy to hear that some of you have applied these things in their day-to-day operations and day-to-day dealings. And that is what I need. Actually, my intention of conducting this course is to just give you a practical competency on these things. And you should make use of this knowledge in your day-to-day job role and job functions. Not only that, you can have your own investments, you can have your own type of dealings, and all sort of things can be done with success if you can apply this knowledge to those things. And that is what you need to understand now. For that, I try my best to give you a very important type of competency where you can apply yourself and get the things done in a particular manner. So then I just want you to really follow it. And with the help of several documents, several screenshots, several internet and web facilities, I will try my best to do that. Now, today, I really want you to just go through the stock market operations. Now, when you go through the stock market operations, you will find that how you can just apply or just do stock market operations in order to get a return. And you can really beat the inflation by doing that. Now, I just want to tell you, of course, now we are in a very high inflation situation. And for that, whatever the savings we do or whatever the savings we have done or some investments, some risk-free investments would not be in a position to give us a adequate return. So therefore, what we need to try how we can get a return which can beat the inflation. So I think in a scenario like this, the best investment would be the share market investments. So then you can expect a higher return, but with a certain amount of risk. But if you can if you have a knowledge and if you know the market, if you know the types of corporates, the behavior of corporates and all that, you would be in a position to apply your knowledge in order to get the optimized type of a return. So therefore, what I just want to tell you, for that you have to apply yourself. And I will give some practical examples for those things. And with that, you try yourself to do that. And I think you all know how to browse through the Colombo Stock Exchange website and what type of information you can gather from that, and the relevance of that information into the share market operations and share market investments. So that is what I need to tell you. And today I will discuss on the CSC monthly and CSC quarterly as two statements. And not only that, the central bank policy statements also I will try to discuss today. So from that, I will try to just give you a certain type of knowledge with regard to the current market conditions and the corporate behavior, and how we can do some investments to get an optimized type of return. started with the 1st of January and it ends in 28th of February. So for the 2 months period. Now this is for the 2 months period in this year, and the other one, the last column is the 2 months period for the last year. So we can have a good comparison by looking at these figures. I can just zoom it if you want. Yeah. Oh, I can zoom it. Okay. Now you see, right. Now just look at the first column. There you have the turnover. Turnover for the month of February 2022, that is 86,582,102,091. So that is, again I can read it, 86,582,102,091. So that is the turnover of equities. Turnover of equities in the month of February 2022. And we can get the turnover in the month of January also. Now you can see in comparison with the month of January, the month of February's turnover has come down. So you can just look at it. Now you see it is approximately double the turnover of month of February. So January has a better turnover, that is 164 billion. So if you compare it with the last year's February, you can see the last year also had a higher turnover in the month of February. So that is the comparison. Now you have compared it with January's turnover and the February 2021 turnover. Now what is the idea you get now? So this is what I want to tell you. I mean, when you read these type of statements, you need to get some understanding and some type of thinking you have to develop by looking at these statements. Now, by looking at the statement, what can you say? If you compare the equity turnover in the month of February 2022 with the month of January 2022, we can see it's a drastic decline. It's a drastic decline. You all of you agree with me? It's a drastic decline because in the month of January, the turnover was 164 billion. It is in black and white. But in the month of February, it has come down to 86 billion. It is about, say, about 50% decline. 50% decline. So, and even if you just compare it with the corresponding previous year's month of February, there also you can see a higher turnover in the month of February. That is 97 billion. Right. Then you look at the next row. There you get the domestic part of the turnover. Now, which means if you look at the share market transactions, there have been several transactions taken place in terms of foreign participants in the market. Now you can see in the month of February 2022, it has come down to only 2 billion, just 2 billion. But if you look at the previous years or previous months foreign turnover, it is 16 billion. Now from 16 billion to it has come down to 2 billion. But if you compare it with the last year's February, it is also higher than this February's value. Right. Now, can you tell some type of overall comment, or can you give an overall comment for this? Now, if you look at the last two columns, there you get the 2 months values. 2 months values in the sense, it is the cumulative value for up to the month of February. So that is the month of January value plus the month of February value. So that comes to 250 billion. 250 billion for the 2 months ending with 28 February. So if you take the previous year, still it is higher than this year. That was 283 billion. 283 billion. Right? So then if you look at the domestic turnover for the last, the months, months of 2 months for this particular year, the first 2 months for the year, it is only 232 billion. If you take the domestic transactions only, foreign transactions, it is 18 billion. Now just look at it, and it is a little positive thing there, because you can see the foreign transaction amount is higher than the previous year's foreign transaction amount. Even though the total domestic amount has come down to 232 from 270, the foreign amount has gone up from 12.7 billion to 18.7 billion. So that's a good achievement, I think. And that achievement has been we can see that in the month of January 2022, that has been, it was earlier, it has come to 16 billion. But the only issue is in the month of February, it has dropped to only 2 billion. And the average has also been given. The next line, daily turnover average equity. So that is daily average is 4.8 billion. In the month of January, it is 8.6 billion. In the month of February 2021, it was 5.4 billion. In the month of, for the 2 months, it was 6.7 billion. And for the last year's 2 months, it was 7.8 billion. Now we can sum up the things now. After looking at these things, and what I need to tell you is, if you are going to deal in the share market, you should get an idea. You should get an idea about the trend, the price trends of different stocks, and the behavior or the trend of different, the different type of indices. Now you all know our Colombo Stock Exchange has two main indices. Those are the ASPI and the S&P 20 SL. That is another index. And not only that, we have return indices also. Right. Okay. Now I suggest, now you can give some comments taking into consideration the statistics now we have discussed. We have now already discussed the statistics on turnover, and we have got that turnover in terms of the domestic turnover and the foreign turnover. And just give me some comments on that. So you can just put the comments on your message queue. You can put it there, so then I can just look at it. Yes, you do that. Just give some comments on that. Because now we have gone through the statistics of the month of February 2022 compared with the month of February 2021, and then we compared it with the month of January 2022, and later we did another comparison, taking into consideration the 2 months past for this year and 2 months for the last year. So that's the type of statistics now we have gone through. So you have to give some comments on those statistics. Just try to do that. People withdraw money from share market. I will come to that. So you all can give different comments, because I think Samit has given some type of comment. Why now people withdraw money from share market? So that is his comment. Anyway, all others can put some comments. Then I will discuss all those things. Now you can just give something about quantities or quantifications, because you can see what has really happened. And invariably, the month of February is a very, very lull type of a month where the transaction volumes been drastically reduced. Such type of a comment I am really expecting from you. Yes, just give some comments, because it is for your interest. I am just doing these things. Yes, Asiri, instability in market show slowdown stock market operations. Yes. That's a good comment. Asiri's comment is a good comment, and what he said is the turnover has drastically been reduced. Even around 50%. Yes, it has come down from 164 to 86. Yes. Yes, others also can give some type of a comment, because when you give comments, really you are engaging with the discussion. That is an active involvement. So I think that active involvement is the most important. And you learn something there, then you can really apply that learning to your day-to-day affairs. Yes, I'm just waiting for the others also. Kaushalya, Bhanuka, yes, Chalana. Perceive that future interest rates will go up and think that share prices will come down. Share prices will come down. Yeah. I will discuss about all these things. Because the Chalana's comment has some sense. Yes, others also can come up with their own comments. Harsha, Ruchira. Okay, I think we can just discuss about each of these comments. And Samit has said that people withdraw money from share market. Uh, okay, I think the comment has a certain sense where he just took it as people withdrawing money or people withdrawing from the share market. So I think that's a certain indication. Now, why that is happening, and for that, Chalana's comment gives a certain indication where he says investors perceive that future interest rates will go up and think that share prices will come down. So the reason for that would be, if the interest rates go up, in normal circumstances, in normal interest rates go up, what would happen is people might invest in risk-free investment, because if the risk-free interest rates go up, rather than investing in the share market, they will go and invest it in the risk-free this thing to get a higher interest rate. But I think theoretically it might happen, but I don't think that it might happen in a short period of time. It might take a longer time, because the interest rates may not go up rapidly during a short period of time. That is the issue. But I think you all now realize that for the last monetary policy committee meeting, the SDFR and SLFR being increased by 100 basis points. So that is an indication of interest rates going up. But only issue is the interest rates may not go up rapidly, or very quickly. It might not go up, but it might go up in a gradual manner. So anyway, even if it goes up, it can't beat the return given by the shares. So then in time to come, the share market participants might realize that. Time to come. Even RCD is one instability market, slowdown, stock market. Instability means, yeah. So they had. Right. Yeah, but the losses, I mean, when the share prices go down, actually it might, I think they can expect a loss. That's a particular thing. But of course, it's like this. Now, if it goes as a trend only, it might happen. But only thing is now the problem is now, as the market stability has some issue. Because of that, it might happen this way. But now I think you can see, if you go to now we will go to the trends of ASPI and all that, then you can look at it and see something. Now, as it is, for the time being, the instability in the markets have really created this situation. So then all of your comments are reasonable, and it makes sense. Right. Now I think then we can go to the next one, where we can go to the indices and all. Yeah. Now, if you go to the second part of it, trade equity, trades. So the meaning is number of transactions. So you can just look at it and see. In the month of February, there have been 819,556 transactions. But if you compare it with the first month, or the January, the share market had 1.120 million transactions. Now, if you compare it with the same month of the last year, invariably the number of transactions been increased. Now, number of transactions, it recorded 575,089, and in the month of February, it is 819,556. But if you look at the domestic transaction amount, it is 810,000 as against 564,000 in February last year. So it's a remarkable increase of number of transactions. But you can see the number of foreign transactions have been decreased. It was 10,568 in the month of February last year, but this year it has come down to 8,736. So this is a bad sign, you can see, because the foreign involvements have come down. So that's not a good indication, because if we can get foreign involvements here, so what we can do is we can have a foreign money inflow to the market. So that's a good thing for the country, but it might not happen.
Sir, now this foreigners supposed to sell the shares, no?
Yeah.
Then how they going to take out the money? Was it from the banking system or in the CSA? How it happened? Like when
Yeah.
they sell the security,
Yeah.
shares, they
Yeah.
will get the money and they won't take back to their home country, no?
Yeah.
Was
Yeah.
it?
Yeah. No. What happens is now they have to open an account, and that is what you call the non-national foreign currency account or something. So in that account, they can do the transactions. And now when they deal with their money, so when they take the money out, they will take out as dollars. They will take it out as dollars. That is how it goes. Because now, say, the Sri Lankan accounting is done through the Sri Lankan account system, and it is done in rupees.
Sir, what is the
Yeah.
Excuse me, sir.
Yeah. Yeah.
Can you hear me, sir?
Yeah.
Yes,
I
can
can
I
hear.
know what is the
I think your voice I
difference
can't hear.
between
It is
trade
really on and
equity
off.
and
On and off. Yeah.
traded
Yeah.
equity, shares traded
Yeah.
equity?
All right. So that's now it says trades. Trades means the transactions, buying and selling, those transactions. That is what you mean by trades. You get my point. Now, say for example, say today there have been 100 buying transactions and 200 selling transactions. Then altogether 300
Can't hear, sir.
transactions. Got my point? So that is what it means. Trades means that. Trades. Trade means either purchase or sale. Purchase is taken as a trade, one trade. Sales is also taken as a trade. Yeah.
Sir, can
Yeah, you are yeah.
you repeat
Now,
it?
I just want to tell you, a trade is a transaction, right? Now, say for example, say today there have been purchases, 100 purchases, 200 sales. Now altogether 300 trades. 100 plus 200 is 300. So the trades means number of transactions. Now when you say a transaction, it can be a purchase transaction or a selling transaction. Now when you do that, when you count it, we call the trades, number of trades. So for the month of February 2022, there have been 819,556 transactions taken place. Now in those transactions, there can be purchasing transactions and selling transactions. That is what it means. Number of transactions. Now out of that, 810,820 is domestic transactions. Only 8,736 foreign transactions. That is what it means. Got my point?
Yes, sir. Yes, sir.
Right. So then the number, now next thing, now we can go to the next one. There it says shares traded shares traded. So that is not the number of transactions. That is the number of shares traded. Now you got my point. There. I think you all can understand that. Now I can just give you an example. See, right? One person did a transaction. He sold 300 shares. Right? He sold 300 shares. Another person did another transaction. He purchased 200 shares. Now altogether, how many shares there? 500 shares. So that is what it means here. Shares traded. So what is the amount? What is the number of shares traded here? 3,248,893,381. That is the number of shares traded. It makes sense, is it? Number of shares traded. Number of shares traded. If you do not understand, I can just explain it on the board. I don't know whether it is necessary. Is it necessary to do it on the board? What do you say? Yeah, Asiri's explanation is correct. He says foreign investors can make fund transfers through IIA, yes, Inward Investment Account, and CTR, Capital Transaction Rupee Account. So these are the accounts where they can do. But I think now here our question is not that. I think we did that. Right. I don't know whether you need any explanation with regard to this number of shares traded. Yes.
So say that for an example, kind of this statement, number of the shares price is 10,000.
Yeah.
For example,
Yeah.
this 819,000 into 10,000, 10 equal to share trades.
Yeah. Right. Correct. That is what. Yeah. Correct.
Okay.
So right now you have 819,556 transactions, right? Now say for each transaction, say number of shares traded is 1,000, say 1,000, 1,000. Then the number of shares traded would be 890,556 into 1,000. That is what you said, no?
Yes, sir.
Right. Correct. That is correct. That is how you can get this thing. Right. Now there you get the number of shares traded would be 3,248,893,381. And if you put it into the domestic side, it is 3,194,711,220. So that is for the month of February. That is what it means. Right. Now I think we can now go to the more important side where we can call it market indicators. So those indicators are very, very important with regard to market.
Sir, excuse me.
Yeah.
Can you hear me?
Yeah.
Now, by going through this document in 2000.
Now I can't hear you. I think something wrong with the
2020
number
of Can you hear me, sir?
Yeah, now I can.
In 2021, number of transaction. Now in 2021, number of transactions are 575,000. Whereas the volume.
Yeah.
Whereas volume is 2021, it's 5.3 billion.
Yeah, yeah.
Am I correct, sir?
Correct.
Five,
Yeah, correct.
and
correct.
this time in
Yeah.
this year it's 3.2 billion, 3.2 billion. But the
Billion, yes. Yeah. Yeah,
transactions
but the
are very
number of
high.
transactions
So
are high. Yeah,
yeah.
yeah.
So what I'm
So the meaning
thinking
is
is the shares were traded at a lower price. Am I correct? Shares were sold at a lower price.
uh,
Because the number of transactions
yeah,
are
yeah, yeah,
high.
yeah, yeah. No, it may not be the case because now here it doesn't say the number of shares. It says shares traded means the number of shares.
So, so what I'm thinking is the people
Yeah,
who bought the shares think
yeah. Correct. Yeah,
the number of shares.
your comment is correct. You are correct.
So I'm thinking that they might have shifted to other investment by selling their shares. Am I correct, sir?
Yes.
Oh,
Yeah. It may be the
what
reason.
do you
Yes.
think about that
Yeah. No, it's
justification?
like this. No. Yeah. No, I can just tell you this way. Now, in the month of February 2021, there have been 575,089 transactions. But the shares traded was 5,348,966,628. So that is the number of shares traded. But anyway, don't think that now the value condition is not coming here. What I feel is that because say for example, now say the share value is 210. When you go by the number of shares traded, the 210 doesn't come there, no? You got my point. Now say for example, when you dealt with 210 shares, a share with the price of 210 rupees per share, right? But we say per share price. Per share price, when you say per share price, our consideration goes to the number of shares. But the value comes that way. So that is what you call the market capitalization. That is what you call market capitalization. Now here we have not gone to the market capitalization. We have just gone to the number of shares only. So therefore, your consideration may not be true. I don't know whether you got my point.
Yeah.
Right, now I can give an example for that, right? So a person purchased 100 shares priced at 210 rupees per share, right? So then there, what you say is, what is his transaction? He has purchased 200 shares. 100 shares, but its price is 210 rupees. But that rupee value doesn't come there. We just say it is a transaction of 100 shares. So likewise, in the shares traded, you get only the number of shares, not the value of it.
Right.
Not the value of it.
We are not getting the value here.
Not getting the value, yes. So only thing here is only the smaller packets or smaller number of transactions or smaller number of shares being transacted. That is what it means. Not higher number of shares transacted, a smaller number of shares transacted. That is the indication. Now say even with 819,000 transactions, it involved with less number of shares. That is what it means. Now, if you compare 575,000 involved with so many number of shares, but 819,000 transactions only involved with 3.2 billion 2 billion shares. So what we can do is we can just we can see the average number of shares in one transaction can be calculated by dividing 3.2 billion with 819,000. Right? Then you get the average number of shares in one transaction. Are you agree? Do you agree with me? If you divide 3,248,893,381 by 819,556. Then what would you get?
Yes, sir. I got it, sir. I got it.
Yeah,
You are correct.
you get the average number of shares in one transaction. We can just look at it. We can just look at it and see. So that's a good good value to look at. So we can do that. 3,248, 893, 381 divided by 819,556. Yes, that is 3,964. 3,964. That is the average number of shares in one transaction. Average number of shares in one transaction. $3,964. That is the average number of shares in one transaction. So if you take the average number of transactions in shares in one transaction in the February 2021, so that would be a higher value, I think. Just see. 5348 966 628 divided by 575 not 89. Yes, it had 9,301 shares in one transaction. Now you see the point. The number of shares have been come down from 9,000 something to 3,000 something. For average,
Transactions are going down, sir.
Yeah, going down. Yeah, that is what it means.
Right.
Number of shares been going down. Number of shares transacted been going down.
Investors are not interested.
That is the thing. Yeah, that is the thing. Yeah, that can be. That is one type of conclusion you can have. Now, I think the reason would be now when people are just feeling that the interest rates are going up. But anyway, the central bank is now trying its best to control the interest rate hike or whatever. For the time being, the call money market, we will go to that later, right? We will go to that later and we can just compare these two things. Now, of course, if the central bank can maintain a low interest rate regime, it would be very much favorable to the share market operations. But if they can't do that, even if they can just control it, though it is been increasing, but that increase is not that drastic, and it's a gradual type of an increase, then also it would not be that much unfavorable. It is also okay. But for the time being, are you thinking that the central bank is in a position to control this interest rate increase? So that is, I think the market perceives that it would not happen. That is why this type of reduction of the turnover reduction is a result of that, I think. The market doesn't see that. They are not very clear. They are not very confident about the central bank's operation. That is the issue. That is the issue. I think you can gather that, no? What do you say? Right. Now, I think we have taken several good points with regard to these statistics, and I think you all can have a better understanding of these things. Now I can just go to the left-hand side of this. Those are the market indicators. There you have the ASPI, All Share Price Index, and S&P SL 20. And in the month of February, the started ASPI index was 13,950, but it has come down to 11,577.94 on the at the end of the month. So you can just look at it. The change is taken as 11%. 11% change. That's a decline. So decline is given in brackets. And if you go to the S&P 20, there also the same thing happened. 4,397.57 was the opening index, and it has come down to 3,936.81. And the decline is recorded as 10.48%. This is with regard to the All Share Price Index and the S&P SL 20 Price Index. But if you go to the return indices, now what is the difference between, I think once I just talked about these things, and today I will just give you a more comprehensive details about the calculation of the price indices, right? So that's a very important thing to look at. I will show you how it is been calculated. And when you talk in terms of return indices, now in the calculation of beta and all, these return indices are more suitable than the just index. But if you look at the ASPI and ASTRI is the All Share Total Return Index. That is the return index pertaining to the All Share Price Index. So what is the meaning of this? Why you take it as in a different name? Why you have given it a different name? What is the reason? Now the All Share Price Index only looks at the return you get from the price change. That is the only thing looked at by All Share Price Index. But if you go into the ASTRI, All Share Total Return Index, what else it looks at? It would look at not only the price change return, but the return getting from the dividends. That is also being taken into consideration. Now I can just give you an indication there. Now we just look at ASTRI for the month of February. It was started with 17,476. Now whereas the All Share Price Index, the index was 13,000 something. Now you can see the difference, no? But it has come down to 15,553 at the end of the month, and that is recorded as 11% decline. I think it is same with ASPI. right? ASPI also been declined at the same level. But if you take the S&P SL 20, there you have a decline of 10.48 for that index, but its return index, the decline is 10.40. What is the reason? What is the reason? Yes, what is the reason? Right, my question, I don't know, is the question clear?
Sir, if they didn't pay any dividend, then the
Yeah.
percentages may be the same.
Yeah,
Is it, sir?
very good. Yes, correct. So in that case, there were no dividends paid in ASP. I mean, all share price index. If you take the all share price index, no dividends. No, that doesn't mean no dividends, but no
Considerable amount. Is it,
considerable
sir?
dividends. Yes, no considerable dividends being paid. But if you take the S&P 20, because there are only 20 companies in that, no, then if one or two companies pay dividends, invariably
But captured.
change that is attributable to the dividends. That is attributable to the dividends.
Sir, can you repeat that? I didn't get you. I couldn't hear you, sir.
Right. Okay. Now you can look at ASPI. There the change is 11% decline. Right. Now if you take the all share total return index, there also is a decline of 11%. So there's no change. It is same as the ASPI decline. But if you go to the S&P SL 20, there you have a decline of 10.48 for the 1 month. But if you go into the S&P SL 20's total return index, there the decline is only 10.40. The decline is less by 0.08. The reason is the particular 20 companies, one or two companies paid dividends during that month. That is why the decline has come down in the total return index. Now you got my point.
Yes, sir. Yes.
Right. So I think that particular dividend payments can be attributed to the 0.08 difference here. 0.08 difference here. Do you agree with me? Because it is now the decline is lower here. Here the decline is 10.48. Here the decline is only 10.40. That 0.08 is attributed to the dividends. Okay. Then the statistics given with regard to the debts. So that is those are the debentures type of things. There you have corporate debt. There are two different transactions. Term transactions means T+1 transactions. Spot means T+2. You all know what it is, no? The meaning of T+1 and T+2. Anything you need any clarification on that? Tom and spot. What do you mean by Tom transaction and what do you mean by spot transactions? If you do a transaction on the same day, we call it T transaction, T. Then you have T+1, Tom transaction. Spot means T+2. Right. Now there you can see only 3 transactions took place with regard to the dates. But in those transactions, there have been the turnovers. Right. I think can you just understand these things? Now, number of trades is only 3, and quantity traded taken as this. The quantity means the number of shares, like, and the turnover means it is multiplied with the value. Now, here you get spot means there are only 10 transactions, and there you have 2,323 like the debentures, and the value of debenture into this gives this. The turnover is that. Now in the debt corporate debt trading turnover is only 387 billion 134 million 407,000. I'm sorry, it is only 387 million, no? Yeah, million 134,000 407 and cents 88. Cents is there. It's a small value. It's a small value compared to the equity transaction. It's a very small value. And there's a thing called price earning ratio. Now you can just look at it and see the price earning ratio has come down, and it's a decline of 16.68. Then the dividend yield is also been checked. At the beginning, the dividend yield was only 2.05, whereas at the end, the dividend yield has gone up to 2.37, and it's a 15.61 increase in dividends.
Sir, what do you mean by dividend yield opening and closing?
No, it's like this. Now, when you look at this, so opening means the first day of the month, right? In the first day of the month, the dividend yield means now they have gone through the dividends already been declared for that month, up to that, on that day particular, and they just calculate the yield. Yield means the rate of dividends. It was 2.05 at the beginning. But if they, at the end of the day and end of the month, they just calculated it again. Then when it was calculated on that day, the calculation gave that figure 2.37. That is what you mean by dividend yield on that day. Because the dividend yield can be calculated for each day. On the opening day, that is 1st of February 2022, the dividend yield was 2.05. 28th of February 2022, the dividend yield was 2.37 when they looked at it. So then it can be taken as an increase if you take only these 2 days. Now you just check the dividend yield on 1st of February and then you check the dividend yield on 28th of February. So that is the month. During that month, there's an increase of 15.61% for dividend yield. That is what it means. Is it correct? Is it okay?
So this is calculated by using the amount of the value dividend paid and the total value of the share.
Yes. Yield means that. It's like this, no? Now, dividends are being paid by very, very less, few number of companies, no? Not all companies pay dividends, no? Very less number of companies pay dividends. So then they just look at the value of dividends, say dividend per share, right? Dividend per share. Now, when you calculate that, you get the rate, the dividend rate, right? That is what you mean by dividend yield. For example, say Sri Lanka Telecom has paid a dividend of say 250 per share, right? 250 per share. Say the share value is so much, some value. So 250 divided by that share value gives you the dividend yield. So that is how the dividend yield is calculated. And in the whole market, what you do is you just get the dividend declared companies and their shares in the market. The declared dividends amounts being divided by number of shares in the market. And that gives the dividend yield in the market. Is that clear?
Yes.
Right. Then there are some other indicators here. Then companies traded equity. Companies traded equity means, now here the number of companies who participated in trading. That is what it means. Number of companies who participated in trading. 276 companies participated in trading. Now you can see how many companies been listed? 298. 298 companies been listed. But out of that 298 companies, only 276 companies participated in transactions. That is what it means. We can look at the number of companies who evaded from transactions, who just refrained from doing transactions. How many companies? 22 companies are there who refrain doing transactions, share transactions. But for debt, it is only 4 companies. And there's another very good information you can get from here. There is a number of days in the market, or we call it market days. There are only 19 days in February 2022. In January 2022, it's only 19 days. Even in February 2021 also, we had only 18 days. Then there's another explanation here, market PBV. That is market price to book value as a ratio. Market price to book value. Now, what do you mean by book value? The par value, we call it the par value. Right. But many of the companies, even though they have a lower book value, they have a higher market value, most of the cases. When they have a higher market value, now for example, if you take the market value of shares divided by the book value of shares, you get the market value to book value ratio. So the meaning here is, at the beginning, you have that ratio as 1.77. But at the close, it has come down to 1.57. What does that mean? As a whole, the share prices have come down. That is what it means. The share prices have come down. And that indicated by the next thing also. That is what you call the market capitalization. Now, market capitalization in billions, 5,815 billion, right? In other words, it is 5.8 trillion at the beginning. But at the end, the market capitalization has come down to 5,251.75 billion. So that's a decline of 9.69. The market price to book value ratio also has declined by 11.3%. Now, can you check this one? Can you see any changes here? I don't think that it has been detected here, anyone. But I think I unless for a very minute change in somewhere. But you just look at and see whether there's any change here. Just look at it and see. Any change here? Nothing, no? That is why the change is taken as 0. Change is taken as 0. Then day by day, the index behavior is given here, day by day. Now say on the 1st of February, the SPI was 12,922. And S&P SL20 is 4,344. And this is the amount of number of equities in the market. Corporate debt, traded shares, equity trades, and the market capitalization is also given. Now, what is the meaning of market capitalization?
Excuse me, sir.
What is the meaning of market capitalization?
So, excuse,
Yeah.
can you just explain the previous page? There are zero balance.
Right. Okay.
What is the headings? I have seen some online detections.
Movement in SPI. Movement in SPI by sector. That is the heading of it. Now here the main consideration is the divisions of different sectors. Now, if you look at it, you have bank, finance, insurance sector, beverage, food, tobacco sector, chemicals, pharmaceutical sector, construction, engineering sector, diversified sector, footwear textile sector, healthcare sector, hotels travel sector, investment trust sector, IT sector, land property sector, manufacturing sector, motors sector, oil and palm sector, plantation sector, power and energy sector, services sector, stores supply sector, telecom sector, and trading sector. Now, out of these indices, can you check what are the higher level of indices? The number, the value. I think I can see 75,955. How did that? Oil palms. Oil palms. Yes. And their bank finance also 738. I think then 48 is also there. That is stores and supplies. Trading is 49.
Trading means?
Trading means buying and selling.
Okay.
Companies means that. Not manufacturing, they buy and sell.
Here the opening means the opening value, or the closing means what is the meaning of that?
Yeah. Opening value means now for each of these sectors, an index is calculated. Now, say for example, you have bank, finance, insurance sector. There you have the corporates. There are some banks, finance companies, insurance companies. All together they have been taken. And all together their market capitalization is taken into consideration and the index is calculated. So that is the number they got for the 1st of February 2022. The number is 38,025.64. So that is the index for bank, finance, insurance. That is the value. And if you take the closing date, you get the same value. But I think these things been not been calculated. I think that is why they don't have a change. No? Otherwise, there should be a change. No? What do you say? Because these values have not been changed even during the month of February. That is what it means, no? What do you say?
The value means the number of transaction or what?
No, this is the index value. Index.
Yeah.
Index value. Now, what do you mean by index? I will show you what is the meaning of real index. But anyway, now here the index being taken into consideration for each sector. How do you do that? You have to demarcate the firms or the companies demarcated as banking companies, finance companies, and insurance companies. All are taken into this sector. And what they do is they calculate all their market values or market value of shares and get the market capitalization and divided by the number of shares. And that will give the index value. So that is how the index value for these sectors been calculated. Now, by looking at this statistics, what type of a conclusion you can come into? Now you can see for each and every sector, you get the opening and closing indices similar. And it records no change also. What does that mean? What does that mean? Yeah. What does that mean? I think you can give a very, very easy answer for this. Now, if you know what it is, now I told you, when the index is calculated, what you do is you get the price of share and it is to be multiplied with number of shares. Then you get the market capitalization. And if you take all the market capitalization of all the companies in the stock market and divided by the number of shares, then you get the ASPI, all share price index. But all share price index is for all the companies. But here we have the sector-wise ASPI. Now, when you say sector-wise ASPI, all share price index, that we calculate for different sectors. How many sectors given here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. There are 20 sectors in the market. Now, for each sector, an index is calculated. An index is calculated for each sector. Now, you can see the sector-wise calculations. But there's a peculiarity in this statistics. What is the peculiarity here?
Sir,
Yeah.
now if you take insurance sector,
Yeah.
then if you go to CSC, you get all the insurance companies under that sector. So there are many changes in let's say SoftLogic Life Insurance PLC, change of percentage,
Yeah.
it's going down by 7.29.
Yeah.
So changes are there.
Yeah.
So
But here it doesn't been demarcated, no?
Yeah,
It's not been
yes.
there. It's not been
Yes.
taken into consideration. So
Yes.
then what is the conclusion you can make here? This has not been touched. This has not been touched, no? That is what it means. What do you say? Otherwise, this should not be possible, no? This should not be a possible thing. This is not a real thing. They have not done anything for that. That is the issue, no?
Sir, for analyzing,
Yeah. No,
don't-
analysis actually now we don't have much of things to be done here. But
in this,
what I want to tell you is now we can just take these things into consideration when you do these. We have a particular theory called two-factor analysis or whatever. There you need to see the market sector of that particular company or whatever. So for that only this is necessary. Otherwise this is not necessary for anyone to get as a real statistics. But of course now this is a very important thing for sector identification. That is the only thing here.
now, sir, if you let's say if an investor wants to understand how to diversify his investment, so
Yeah.
by going through this
Yeah.
document, he can understand
He
what
can
are
understand.
the
Yes. And
active
he can
sectors.
at the same time he can get an idea about the indices of these sectors.
Yes.
So that is the only thing the person can do by looking at this. Then you have the market performance. There you get they don't have each sector calculations, but you have a overall calculation for all share price index and S&P SL 20 price index. There you give the value for each and every day. You have the market turnover and the market capitalization also. Now you can see, right. Now the market capitalization is given here. Now this is given in millions, right? This is given in millions. So in that case, it is 5,763,882 million. So what is the real value here? It is 5,763 billion, right? 5,763 billion or 5.763 trillion. So that is how the market capitalization goes. Now you can see the market capitalization has come down drastically in the end part of February, right? You see, in the end part of February, it has come down drastically to 4.9 in some days, even 4.6 in one day. That is the lowest market capitalization. That was on February 24th. Now, can you attribute this market capitalization to any Sri Lankan events? Any Sri Lankan events? Now, this floating thing, and you reported that you don't have fuel to run your power stations and all. Now, all these things had a big impact on the share market.
And the day we paid that bond,
Yeah,
sir.
all these things had a big impact on the share market. So that is why the market capitalization also has come down drastically. Now you can have a good understanding about these indices by looking at these market performance indicators, and it is been given as ASPI, then S&P SL20, then the equity number of equities is given. In millions, it is 9,706.5 million. So that means it is 9.7 billion. It is number of shares in trade. Then the transacted number of shares. And market capitalization means number of shares into their respective prices, multiplications. And if you add the total, you get the market capitalization. Then you just look at these two graphs, ASPI movement during February 2022, S&P movement during February 2022. Now these two things are parallelly going. However, now you should expect that also, but I don't know. Do you have any other views on that with regard to the the comparison of ASPI movement and the S&P movement? What do you think? Comparison of ASPI movement and S&P movement. Now you can see, I can just drag the arrowhead from the point 1st of February 2022, and when you look at it, in the first 3 days or first 2 days, there's a decline, and there's a small increase later on, and again there's another decline, and again an increase. Then for a couple of days, it just prevailed in the same levels, and again it has come down, and it has again come down, and there's a small increase, and small increase at a later stage. But ultimately, it rested at a particular point which is lower than the starting point. So this is the story for the month of February. If you take the S&P also, similar type of trend you can look at. But you can see the same type of ups and downs are reported here. There's a parallel type of thing.
So,
Yeah.
The major players in S&P movement
Yeah.
are contributing to same changes in ASPI movement.
Yeah, of course.
So
Yes.
they are the major players also there in ASPI.
That's the thing.
Because of that, we can see similar trend in
Similar trend,
graphs.
yes. Because even say, though we have 298 companies listed in the Colombo Stock Exchange, whereas only say 20 to 25 companies play a major role. Now their movements or their transactions would be reflected in the SPI movement. Not only in the SPI movement, even the S&P movement also being reflected in the same type of companies. Then you get the foreign trading statistics with a more detailed way. Then it says purchases and sales summary for the month. Now, when you say purchases and sales summary for the month means foreign companies, they did 1,316,47527 worth of purchases. Sales they did 1,744,687,341 worth of sales. Net is foreign companies been yes, they sold 1.7 billion, whereas they purchased only 1.3 billion. So therefore, there's a minus value of 428 million. Then if you go into the individuals, they purchased 517 and selling 480, and they have a net purchase to sales value 36.8 million. Then if you go into local companies, they have more or less similar values for the purchases and sales. Their difference is 2.9 million. Our local individuals or local companies, there have been 30 billion worth of purchases and 33 billion worth of sales, and it is a 2.9 billion decline. But if you take local individuals, they purchased 53 billion 988 million 731 362, and they sold 50 billion 651 something, and the difference is 3.336 million. Now you can have another purchase and sales summary. Right, now you can see it. I think that the things are given in a worksheet manner. Now you just look at it. Market capitalization. End of the month. The market capitalization they have calculated as per the month end. Expo Lanka. Shares. 1,954,915,000. This is the number of shares owned by the Expo Lanka. And the price of the share is 295.75. Now, this capitalization comes with, when you multiply 1.954915 with 295.75, you get this value. 578 billion, 166 million, 111,250. That is the market capitalization of Expo Lanka. If you take to another company, LOLC Holdings, their number of shares would be only a small amount, that is 475,200. Sorry, 475,200,000. And each share is valued by 994.75, and its capitalization is 472,705,200,000. So likewise, you can get every company's number of shares and its share value, and multiplying the share value with the number of shares, you get the market capitalization. Now, this is a very important information sheet, because every share value can be taken from them. If you go into this page, this is page number 7. And in the page number 7, you get the market capitalization of all the companies. Now we can just look at Dialog and see what it is. They have yes, Dialog in. They are the number of shares indexed is 8,200,607,505. And the price of a share is 1170. 1170 to be multiplied with this amount, and it is taken as, the market capitalization is taken as 95,947,107,850. This is the market capitalization for Dialog. So likewise, you can get for each and every company the market capitalization. So you can see it goes into pages, many pages, right? You start with 7. Six, 7. 7 is the page where the market capitalization is explained. Then you go to the page number 8. Here also you get the market capitalization. 9 also. 10, 11, 12, 13, 15, yes, up to from 7 up to 15, all are the details of market capitalization with different companies. And the last traded date is also given here. So this is a good indication or indicator for investors to look at. Then you can see the change of directorate or whatever. Those are non-financial type of information. Then you get a detail of resignations. Right, you can see the different entities with regard to the resignations. You have details here. These are the non-financial type of information. But I think those things also have a certain impact on different companies. And there's another thing called watch list. Now, watch list means it really, these are the companies coming under this watch list are the companies where they did some type of a wrong thing or some non-compliance with regulations and that type of things. But the Colombo Stock Exchange wanted them to do something, some type of activity where to comply with some type of a statute or whatever. Now you can see, now one company in the watch list is Lanka Cement PLC. Now the reasons were given. So I think it really went back to January 2018 even. Still they have not really supplied those things. Non-submission of financial statements for the quarters ended 30th September 2014 to 31st December 2016. So these are drastic things. So you can see, I think now when you look at these things, you can get an idea about the company. So then Lanka Cement PLC is not really an inactive company. In Swarna Mahal Financial Services PLC, Adam Investments Limited, Ceylon Printers PLC, MTD Walkers, Office Equipment PLC, Paragon Ceylon PLC, Lucky Lanka Milk Processing Company, Ceylon and Foreign Trades, Adam Capital, City Housing and Real Estate, Multi Finance PLC, Blue Diamonds Jewelry, Nation Lanka Finance, Winfood Finance also now come into that, Standard Capital PLC, Anilan Hotels, Watercolor Plantations, Singhaputra Finance, Serendip Engineering, Radiant Gems, ACL Plastics, You can just see ACL Plastics have been transferred to watch list. That was transferred very recently, 31st of January. Non-compliance with corporate governance requirements, Rule 7. And there's a thing called second board. Then you have some listed companies, notice of annual general meeting. It is given the company name, the date on which the annual general meeting is held, and the venue for that, the time. All these are non-financial information. Then you get another page for all the details, all the regulations, directives and all issued by the CSC, Securities Exchange Commission also. Then you will have security trading statistics. Again, you can get another index information about some indexes of sectors, automobiles and components, banks, capital goods. So this is another demarcation, movement by sector. Right. I think most of the things we have now gone through. And here it is given Colombo Stock Exchange's different branches. Right. Now you can just look at these things. Before that, I can go to the earlier section where you get with regard to security trading statistics. Yeah. Now you can see banks, automobiles and companies. Now look at Kalani tires. And it started with 104. That is the price. But it at the close it was 85.6, 85.60, and it's a decline of 17.69 as a percentage. 1,952 trades happened, containing 1,313,706 shares and a turnover of 120,493,866.80. Now you can just look at the different type of companies in different sectors. Now I think you get a general idea about this monthly publication of Colombo Stock Exchange. Now this market capitalization statistics are very important because you can see how the market capitalization changed during the month. Right. Then I will just go into another report where you can This is the quarterly report. Can you see this on the board, on the screen? This is the quarterly report for CSC. Can you see the report on the screen?
Yes, sir.
Right. Now this deals with the fourth quarter 2021. And in comparison, they have given the statistics of 2021 quarter 3. And in order to get a comparison, last year's fourth quarter also taken into consideration. That was the fourth quarter of 2020. Then quarter 1 to quarter 4, 2021. All together taken. And 2020 also all together taken. Right, we can come back to the session. Right, now we took the quarterly report, that is quarter 4 of 2021. There also you have the same type of statistics with regard to trading. Now there are in the fourth quarter 2021, there's a 6 billion daily turnover average. And that's a big value for quarter. But earlier quarter, that is in quarter number 3, that is only 5.2 billion average. In the same manner, you can just look at it. Now you can just see the SPI movement and S&P SL20 movement. Now there you can see a different picture here. It's a real increase in the quarter 4. In the December last quarter 2021, I think it has come up to 13,000 something. S&P 20 also the same type of trend prevailed. Most of the price changes are, yeah, the banking sector, there's a decline, more or less. Now you can just see the corporate industrial sector, access engineering. They have a upside trend. ACL cables. Aitken Spence, actually there's a small decline. Central Industries, Dockyard, EB Creasy, Portland, Haley's, Amas. Amas also had a decline. Kelani Cables, Lanka Ashok Leyland, Lanka Tiles. All are doing well. Now just look at it in the main board. Abans, Lankotu Porcelain, Haley's Fabric, Haley's Fiber, TJ Lanka, Ambient Capital. Now you can see the hotel sector has a decline. That is obvious. But some of the hotels been able to have a positive side. Payroll Research, Citrus, Fortress and all. You can see the energy sector also. All the insurance companies, they also recorded a positive. These are the new listings in the quarter. Expect Corrugated Cartons Limited, Lanka Credit and Business Finance Limited, Sarvodaya Development Finance Limited, Capital Alliance Limited, Zenith Business Solutions Limited, First Capital Treasuries PLC, Myland Developments Limited, Cooperative Insurance Company Limited, LOLC General Insurance Limited. These are the dividend announcements. Now you can see the percentage, dividend per share. Now when you say dividend per share, then the yield can be calculated by dividing this by the book value of the share or the market value of the share. What list is also given here. It is same with more or less the monthly report, but more information is given there. Right. No, I just want to tell you the index calculation. We'll see. Can you see this on the screen?
Yes, sir.
Right. Now here, the Colombo Stock Exchange has published a particular document called Index Methodology. There they explain the way in which the different indices are calculated. They have given the details of calculation of all share price index and the S&P 20 SL price index also. So we can go through it and get an idea about it. So what I feel is if you have this idea, so it is very easy for you to get an understanding about different corporates, different entities where they listed in the stock market, and you are in a position to select the stocks what you need to invest, and whether your investment is really giving you an adequate return. So that is what you can check through these methodologies, where you know how the index is being calculated, and through the index how you are going to guess or gauge the market, and to have an evaluation on different stocks, arrive at the beta of different stocks. And by getting the beta, then you can get an idea about the risk and return characteristics of the stocks. And these are the things which you can understand and develop. And I think if you have that knowledge and understanding, it is easy for you to see how you can optimize your portfolios by investing in different stocks and diversification of the things. Yeah, you can do. And not only that, if you have a good understanding of the behavior of different corporates, the way they do things, the way they engage in different strategies, different business strategies, and the outcomes of those things, you would be in a position to see how the companies fare in the share market. You all can exploit the situation and get into a successful way where you can achieve a level of return which can beat the inflation. This is a publication on December 2021, a very latest publication. Now, first of all, they just explain the abbreviations, ASPI, All Share Price Index, ASTRI, All Share Total Return Index, CSE Colombo Stock Exchange, EOD End of Day, IMC Index Market Capitalization, PH Public Holdings, XTJ State Dividend Adjustment. Right. Now we could see the introduction and see what are the objectives of having an index and supporting documents. So this is the first thing which we need to understand. The index objectives: the Colombo Stock Exchange calculates and disseminates its benchmark index, all share price index, that is designed to measure the price performance of all listed securities and all share total return index to measure their total returns, price return plus the dividend return. The ASTRI reflects returns due to both price changes and dividend income. Now, as I told you earlier, the total return index that reflects not only the returns of price changes, but the dividend income also. Then the ASTRI sends a better measure of returns from an investor's perspective. In computing the ASTRI, is assumed that dividends earned from a share are reinvested in the market. So that is the assumption. For any type of investment, even a normal fixed income security also, we have this assumption. The ASPI is calculated on real-time basis and ASTRI is calculated on end-of-day basis. So what is the meaning of that? Real-time means at a particular point we calculate ASPI. But the ASTRI is calculated on end-of-day basis. So the meaning is, if I want to get the ASTRI 12 noon, say, 14th of March, 12 noon, if you want to get this TRI, then you get only the previous working days, end of the day STRI. That is 11th of March STRI. Is the STRI we get on 14th of March, end of day. But 14th of March STRI we can get only on the 15th of March, because end of the day only we can calculate STRI. Any questions on that? Any questions on that? While the SPI is calculated on a real-time basis, STRI is calculated on end-of-day basis. Then the supporting documents. The index calculation is based on public holding percentages disclosed quarterly by the listed entities. Now, what do you mean by public holding percentages? Because in some companies, all shares not been quoted on the public. So therefore, only publicly quoted shares being taken into consideration when the index is calculated. Now, the public holding definition, there's a definition of public holding. You can just go to this link and get it. What do you mean by public holding? Right. Anyway, we will just go through that. Following classes of shares listed on CSE are eligible for the index inclusion. Voting shares. The shares are in two categories. Non-voting shares is also there. Now, since inception, you can get the voting shares into calculation. Non-voting shares effective from 19 June 2017. Now, when you have the index calculation is given this way. In general, the index level is calculated using the following formula. Now, the formula number 1, index level is equal to current market capitalization. Now, what is the meaning of current market capitalization? You have to go by each and every company and get the market value of share. And it is to be multiplied with the number of shares listed. So that is what you call the market capitalization. I think we have gone through the CSC monthly report. There you have seen the market capitalization of different companies. And when you say the divisor is equal to the base market capitalization and then divided by base value. Now, what is the meaning of base value? Now, base value is a particular value given on the base year. Now, for example, in I think the CSC has given a base value as 1000 or something. So in the year 1980 or so, I will look into that and I will just give you the details. I think it is not difficult for you to get those details. Now here, right now, current market, they have given it as 100. Base market capitalization divided by 100. Now, what do you mean by base market capitalization is you have to go to the base year. Base year, you get the base year or whatever, and particular date is also there. On that particular day, you get the base capitalization of all the companies, and you can add it up and then divide by 100. Then you get the index. Sorry, divisor. And current market capitalization divided by that gives you the index. Right. If you go into that again, index level is equal to current market cap divided by divisor. Now, what do you mean by divisor? Divisor is calculated through base market capitalization divided by base value. So this divisor is a constant value where you have already got, and For you to get the ASPI, what you need to do is you get the current market capitalization, and that value has to be divided with divisor. Okay, I think it's understood.
So base value means the
Yeah,
value
that's it.
at the time of starting the
Start in the index, yes.
index.
Correct. Now in the ASPI
Market
calculation,
value or the book value, the base value.
no, base value is a it's an assumed figure. Normally we assume that figure as 100, the base value, right? Now just look at the 3.1 calculation of ASPI. They say where divisor is equal to base market cap divided by 100. So there the 100 is the base value, right? 100 is the base value. Now the base market cap means now we have to decide on a particular base date. In my opinion, I don't know. I am not very clear about it. I don't have any idea. But there's a particular date on which we did that. So that day's market capitalization is taken as the base market capitalization, right? So that is what it means. So that base market capitalization and the base value are constants because those are given figures. So the base market capitalization divided by 100 will give you the divisor. That is the constant value. And in order to get the ASPI calculation, what you need to do is you need to get the market capitalization at a particular point, and it is to be divided by the divisor. We can see what these figures are, right? Is that clear? If I remember correct, I think 1980 was the base year for this. 1980, January 1st, 1980 or so. I'm just giving you the base on which we do it. Now, just assume that the base date is 1st of January or 31st December, whatever it is, 31st December 1980, right? 31st December 1980, you go to the share market and we calculate the market capitalization. So for that, we don't need any divisor, whatever it is. What you do is you get every prices, right? Every price of the shares, and that is to be multiplied with the number of shares in the market. And the total will be called, total is the market capitalization. That is to be divided with number of shares in the market, right? So that is what you, not the number of shares, sorry. Base market capitalization is number of shares into the value, right? Number of shares into the value. So on the 31st of December 1980, you go to the stock market and get all the share values, and the share value has to be multiplied with the number of shares, and the total is taken as the base market capitalization, and that has to be divided with 100. Then that is what you call the divisor. So then when you do the current ASPI calculations, you get the market capitalization. It is to be divided by divisor. I will just explain it on the board, right? I will just explain it on the board. Oh, do you need it, or you can understand the things as it is? What do you say?
So, what is the reason for using 100, the value 100?
Yeah. Normally, now when you say base, now when you calculate a particular base, you normally take 100 as the base value, because in most of the cases we go by the percentages. That is why we take 100 as the base value. So in order to have a particular level, a benchmark, that is why we took 100. It is a normal practice in all the countries. In all stock markets,
in all other indices,
other stock exchange
they are
also,
calculating, taking the base as 100.
100, yes. So then, now the way of calculating that index is the same for every country. For every country, the calculation is the same. Only difference is their base date. Base date would be the difference. So now in Sri Lanka, if I remember correct, the base date is 31st December 1980. I can't confirm. I will confirm it later, right? For the time being, just look at, just because the thing is now there's no hanky panky for that, because it is a given one. So therefore, it's only a thing of remembrance or whatever. So therefore, you need to get the concept, right? So then the divisor is the base market capitalization divided by 100. So what do you mean by base market capitalization? The base date's market capitalization is the base market capitalization. Now in my example, I told you the base date was taken as 31st December 1980. So on that particular day, we just looked at the stock market and got the values of shares or prices of shares, and we multiply the number of shares with the particular value for each and every share in the market, right? So the total would give us the base market capitalization. That has to be divided by 100. Then you get the divisor, right? Divisor is that. Then what you do later? Then you get the current ASPI calculation. There what you need to do is you need to get all the shares, get the values of it, get the prices of it, and that to be multiplied with number of shares. And then you get the current market capitalization. So that has to be divided by the divisor. Divisor we have already calculated, no? Then you can get the ASPI calculation. Now as it is, if you go to, say, if you go to this monthly thing, there you get this market capitalization, right? This is the market capitalization. Now, if you take these totals, the whole total would be the total market capitalization for the stock exchange, right? You got my point, no? Now, these things to be added up, and that is what you call the total market capitalization. That should be the numerator. That should be the numerator. A denominator would be the divisor. So divisor we have calculated already. So I will just explain it on the board.
So that means always the ASPI compared with the base year.
Yes.
Is it practically, sir, the values are given long time back? So the current figures are, I mean, after 20 years like that, 20, 30 years.
Yeah.
Its comparison is something.
Yeah. No, that's the thing. No, I have some doubt, because earlier it was 1980, right? Earlier it was 1980. I don't know whether it has been changed later.
No, let's say, sir, is it 2010? I mean, 2010 or 2015?
Yeah.
10 years, 5 years back data compared with the current year. Is it a practical?
No, it's okay, because the thing is now what we do is we just measure the things as a base. Now taking the base as a particular year, but it might go for different. Now say you can see now these days our index goes as about 12,000-13,000 or something like that, no? But about say 10-15 years back it was only 1,000 or something like that, 1,000, 2,000 or something like that, no? In 2010 or so, right? But that doesn't have that much of a issue, because it's a comparison given to a certain transactions. So therefore, it doesn't have that much of a issue. Only thing is, now if it is very, very old, only that that issue comes up. Otherwise, it won't come up, as you say, because 20 years, 30 years, even 40 years would not be a matter. Because if you go to other stock exchanges in the world, they are also in the same. Because the thing is, now sometimes their indices are reporting very, very high figures. That is the only issue. Otherwise, there is no issue, because you do a measurement, no? You do a measurement. So therefore, only thing is, you just assume a particular base. From that base onwards, you take the things. Otherwise, there's no, big impact on that. I think if you think clearly, you might realize that. Right? Then I will show you how we can do it. Right? I will show you. ASPI is equal to current market capitalization divided by divisor. Then what is divisor? Base market capitalization divided by 100. Right? Then we need to see what is the base date. If you know the base date, it's very easy for us to do the calculation. Now on the base date, I assume the market capitalization as, say, 220,000. Say this is a hypothetical figure, and this is divided by 100. So then you get the divisor. And it is, the value is 2,200. 2,200. Right. I will just now, since this is a very practical thing, I will assign you to do that. You just look at the website and get all these details. So this is another assignment for you. Just do it. And then you can learn so much of things from that. Then what I do is, I just assume the base market capitalization is this much, 220,000. It's a very, very small figure, but for the time being, I am just assuming that. Then the base value is 100, no? Therefore, this to be divided by 100. Then the divisor comes to 2,200. Now, in order to get the ASPI calculated, what should we do? We should get the market capitalization at the current level. Now, I will just have a hypothetical figure for that also, right? So, I will think that the figure is, say it is 1 million, right? 1 million, just to say. That is the current market capitalization, 1 million. ASPI is equal to 1 million divided by 2,200, right? So then when we do the calculation, we will see what is the value. Yeah, the value will get 4,454 454 and 0.54. This is the SPI. I have taken all the hypothetical figures.
Sir, now if we take today's ASPI change and
Yeah.
if we compare it with another country, we
Yeah.
can do it because of we use same foundation for calculation, isn't it, sir?
Yeah, but now only thing is there's no relevance of
Percentage
comparing.
wise,
Yeah.
percentage wise increase. Let's say the activity, depending on the activities, we
Yeah,
have
that is
10%
okay. That is okay. That is
increase,
okay.
and
Yeah.
in Japan there is a 10% increase
Yeah.
also.
That's okay.
So,
That's okay.
uh,
Because the percentage wise increase, if you go into that, then there won't be any base differences. So therefore, the base is being taken into consideration in that manner. So there's no issue on that.
uh,
Even if you can't really compare the just the index, you can only compare the growths or declines.
yes,
Those
yes.
can be compared. There's no
Hmm.
issue. Right. I just want you to, I want to ask you whether you have understood the methodology. That is the most important thing. Whether you have understood the methodology. Yes, done. Yes, correct. Now I will go again to the document. Can you see the document on the screen?
Yes, sir.
Right. Now just look at this index calculation. ASPI is calculated by current market cap divided by divisor. Divisor is calculated by base market cap divided by 100. Right. I think now it is understood. So you are in a position to calculate it, provided that you know the divisor. And I have now given you a certain exercise, classroom exercise. Now your uh, task is to get the divisor applicable for Colombo Stock Exchange. Whatever the way you can do, you do it, right? So that's a good exercise for you. And then just check the ASPI calculation, because it is possible for you to get the total market capitalization for each day. And if you know the divisor, you can get the ASPI calculated. Is that okay? If you have any questions, let me know. Right. I think I just give you that as an assignment. What you need to do is, number one, I can put it on the board, right? I will put it on the board. I will read it for you. I will read it for you. Using any methodology, find out the divisor for the calculation of ASPI through the CSC website. That is part 1 for your assignment, right? Number 2, after getting the market capitalization of 11th March 2022, calculate the ASPI for the same day. Is that clear? Because it's a type of an exercise you need to do, because you will get enlightened by this type of activities, and you will find that how practical these things are, and you sometimes test or try several hypothetical things, and later on you will find how it is successful, how successful it is. Yes. What is your response on this? Are you okay with this? Are you okay with this? All right, correct. 1985, yes. Okay. Right now you can see the document again. Now we can see how the calculation of ASTRI is done. So there you see the subheading, adjustment for cash dividends. Adjustment for cash dividends. In order to adjust the price index for dividends, an index dividend adjustment is computed, representing the value of cash dividends declared by the component security on ex-dividend date, as expressed in index points. The formula used for the computation of the ex-dividend adjustment for a value-weighted total return index is given below. Now just look at it. Now they have given a formula for that. This is a base index value is given. Now this value we have calculated actually already. GI is the dividend per share of the ith component security. That means for each dividend we have to do that. WY, weighting of the ith component security, equal to the number of ordinary shares issued by the company. Yes. B, base market capitalization of the relevant price index. Yeah. Then another formula is the formula used for calculating ASTRI given below. ASTRI. Yeah. This is today's value. Total index value for the previous day is given here. ASPI plus XTJ divided by ASPI. Now, I think don't worry about these formulas and all, but the adjustment is very important. But I think you should not much worry about these things, because these things what you need to see is there's a way of doing it. That's only because you would not be asked uh, how this has to be done and all that. So therefore, it is not necessary to bother about these things. So, but only thing is now you need to see that there's a particular manner in which you do this. That's the only thing you need to get. But the market, this ASPI, that is all share price index calculation, is a very simple one, not as this total return index calculation. So therefore, you need to have some idea about it. But this is also another thing. But you can just think this is this all share price index, total return index is a index where the dividend yields also been taken into consideration. That's all you need to think about. Then you can just look at the index maintenance thing, rebalancing or whatever. And the public holdings are also taken into consideration. Our base date is given here, right? SPI base date is given here. 2nd January 1985, yes. ASTRI base year was 2004, 2nd January 2004. And the base value was 1000 for that ASTRI. Now, I think very important details are given in this document, so you can read it and just get an update on this. Right. Anything you need to clarify on this? Now, that particular assignment in the sense it's a small exercise, right? So don't take it so serious. But what I need is for you to do that. So what you need to do is you need to get the through the website or whatever, you get the divisor. of that divisor calculated and calculated, or you find it, the divisor. So after getting the divisor calculated, you can have that, market capitalization of a particular day that I have given that date as 11th of March 2022. And for that day, you just get the SPI calculated and just compare it with the calculated SPI in the CSC on that day. So then you can be happy with what you have done. Right. Now I will go into another document where you have to talk in terms of policy, the monetary policy of Sri Lanka. Can you see the things on the screen? Press release? Yes.
Yes, sir.
Right. Now, this press release was issued by the Central Bank of Sri Lanka on 4th of March 2022. That is the Monetary Policy Review number 2 of the year 2022. That is what you call the March 2022. Is the Monetary Policy Review. The Central Bank of Sri Lanka further tightens the monetary policy stance. That is the heading of the press release. Now, you can just see the intentions, the regulatory mechanisms, and all sort of things included in this. And as a student of investment and portfolio management, you have a greater importance of these things, because by looking at the monetary policy review document, you would be in a position to have a good idea, good projections on future interest rates in the country and the inflation expectations. So that is why I have just given this press release for your reference, and we can have a collective discussion on these things. You also can put some comments on this to show your understanding about these things. And I think sometimes one of you or more, some of you can put forward very, very important and very innovative ideas on these things that I really appreciate. The only thing is you all should actively participate in these discussions. Then only you can get the best out of it. So my earnest request from you is to do that. I think in a very short period of time, you would realize the importance of that. And you yourself feel that you have achieved a substantial level of improvements. And it might really pay the price. You would get rewarded for that. Right. Global economic growth to moderate while inflation to remain higher. So this is the prediction on the global economy. So what does that mean? Global economic growth to be moderate. What do you mean by that? Moderate means it's not that high, but rather mid-level, like, while inflation to remain higher. So inflation would be little higher, because I think you all can observe for the last couple of years, even in the global scenarios, you have not seen any high inflation, but now it is becoming higher now. That is what I can tell you. As per the January 2022 update of the World Economic Outlook of the International Monetary Fund, the global economy is expected to moderate from 5.9% in 2021 to 4.4% in 2022. So now you can see the reality. Actually, in the year 2021, the growth rate was 5.9, whereas the IMF predicting 2022 would have a growth of only 4.4%. That's a reduction of 1.5 percentage points. So that's a drastic reduction in if you look at in terms of the 5.9% growth in the last year. The recovery in the global economic activity is expected to weaken due to the spread of the Omicron COVID-19 variant, supply chain disruptions, and geopolitical tensions in Eastern Europe. So that is the war. Now, war erupted between Russia and Ukraine. Global inflation is expected to remain high and persistent due to elevated energy prices and continuing supply chain disruptions, prompting stronger monetary policy responses by central banks globally. Now, this is the commentary made by the Sri Lankan Central Bank in terms of the global economy. Because we have to really face with global headwinds in the economy, global economy. So I think they have correctly mentioned that the global situation is really, in terms of the growth, it is becoming lower. In terms of inflation, it is becoming higher. So this is the situation in the global economy. Now, in terms of that, global and domestic developments have posed challenges to the recovery of the Sri Lankan economy. Now, we are also in a bad shape. Now we try our best to recover ourselves from these bad shapes. But the global and domestic developments have posed challenges to the recovery. Now, in these circumstances, we need to see how we can get out from this drastic situation. The domestic economy is expected to make headway underpinned by the successful COVID-19 vaccination drive of the government and relaxed mobility restrictions. However, economic activity is somewhat affected by recent adverse developments in the global front. Now, I think that all we should, agree or we should accept, because the supply chain issues due to the war situations, different other type of geopolitical activities and all sort of things. The commodity prices rising. But Sri Lanka really had a big hit from all those things together. That was the concentration of issues, as well as in the domestic front, particularly in the form of power and supply interruptions. These disruptions have to be addressed immediately to ensure the continuation of uninterrupted domestic production. That is the thing. Now, with the power disruptions and all sort of energy issues, our ability to enhance production and have exports would have a very big challenge. Because unless we can enhance our momentum in export growth, we would be nowhere. And while continuing with the efforts to strengthen the production economy through well-targeted growth policies. And you can see, external sector faces heightened challenges. Although earnings from merchandise exports continued to record over $1 billion for the 8th consecutive month in January 2022, expenditure on imports continued to increase at a higher pace. Tourist arrivals increased noticeably thus far during the year, although,
Sir,
yeah,
can you zoom the document, sir?
yeah. Is that okay?
All right. Thanks, sir.
Right.
Thanks, sir.
Now, I just don't want to read the whole thing to you, but what I want to tell you is, now we had to face with external sector faces, I mean, the heightened challenges. I think there's no second word about it. All of us should adequately agree with these things. But only issue is, there have been several misdecisions and several types of inabilities in our part, the Sri Lankan part, that would be the reason for all these things. But nevertheless, we all should get together and get out from this drastic situation. That is the only way out. You can't do any other thing. We can't really just blackguard each other and do anything. But I think these things actually really exaggeration. The Sri Lanka rupee was maintained broadly stable, while the gross official reserves as of end January 2022 are provisionally estimated at $2.4 billion, equivalent to 1.3 months of imports. At the same time, the government and the central bank have been avidly pursuing avenues to attract fresh foreign exchange inflows while facilitating continued domestic economic activity. So I think this is a really exaggeration. I don't know how they have done that. But anyway, but there's no use of blackguarding each other. So I think each of us should have some innovative ideas, some types of, special or specific type of abilities of us to be pooled and just, focus towards the country's survival. Now just look at this. Market interest rates are trending upwards. Now this is another thing which we need to be very much concerned with. As it is now, you have seen that the stock market has a definite type of impact that as a result of this interest rate upward trend. So that would really affect the value of fixed income securities in the institutions. Not only that, the stock market operations, the share market activities, all those things would be affected by upward trend of the interest rates. The expansion of domestic credit, particularly credit to the public sector, was robust. Nevertheless, some slowdown in the growth of broad money was observed due to the decline in net foreign assets of the banking system. Following the monetary tightening measures, market interest rates are adjusting upwards. However, the adjustment in deposit interest rates remain sluggish. So this is the thing which we need to understand. Now, even though you have so much high inflation, still the deposit rates remain in the same levels as it was at about 1 year back. The same rates were still being maintained. Banks and finance institutions are urged to make the required adjustments to deposit interest in order to promote savings. Now, what happens is, now you can see, if you go to the open market operations, you will see that the market liquidity has come down. In substantial levels, it has come down. Right? So this is the situation now facing the banking system. invariably, I think the interest rates would have to be enhanced, even the deposit rates. But for the time being, the deposit rates have not been increased by the banks. Meanwhile, the yields on government securities have also increased, notable to reflect market conditions in view of the higher financing requirements of the government. Now, this is another drastic situation. So you can see when the government securities interest rates go up, normally the government securities are considered as risk-free securities. But if you look at the yield of government securities, say 7.5, 8.5, 9 or so, but FDs, fixed deposits of banks, just have only 6.5 or whatever. Now it's a drastic situation where the risk-free rate is higher than the risky investment rate, the commercial bank rates. So that has to be reversed. That has to be reversed. Supply side factors have contributed to price pressures, while the build-up of aggregate demand pressures is also visible. Now, this has become, so this was as a result of supply side disruptions, increasing global commodity prices, and associated domestic administrative price adjustments and food supply disruptions have been the key drivers of rising inflationary pressures domestically. So that is correct. The acceleration in core inflation also reflects the firming up of aggregate demand conditions in the economy, propagated by the accommodative monetary conditions and fiscal measures that were in place since the onset of the pandemic. While inflationary pressures are expected to remain elevated in the near term, the pressures emanating from the build-up of aggregate demand require proactive measures to anchor inflation expectations and retrace inflation to the desired levels over the medium term. Right. Now, I think this is the core of this press release, basically. Now, even we have understood what is really happening, but we need to see how we can mitigate the things with some innovative ideas. If you can do that, I think is more beneficial for the country. A policy package to support greater macroeconomic stability. Considering the severity of the external shocks and continued disruptions to domestic economic activity, the Monetary Board was of the view that a comprehensive policy package containing both traditional and non-traditional measures, along with other initiatives that have an impact on the overall economy, is essential to counter such economic headwinds. Now you can just look at these things and see what are the main steps which the central bank suggested to take on these things. Accordingly, after carefully considering the current and expected macroeconomic developments, both globally and domestically, the Monetary Board of the Central Bank of Sri Lanka, at its meeting held on 3rd March 2022, decided to reinforce its stance adopted in January 2022 and decided to, right now they come up with their own policy measures, increase the standing deposit facility rate and the standing lending facility rate of the central bank by 100 basis points each to 6.5% and 7.5%. Now I just want to show you another exceptional thing in Sri Lanka now. Now you all know the FD rates in the banks, commercial banks, is in the range of 5.5 to 6, is it? Are the banks giving higher rates now? What do you think? Yes, I just want an answer from you. I think there are some participants who are employed in banks. Do you have any idea about it? Yes. In general, the banks pay a lower rate for FDs, no? Is it? Can you just reply?
Yes, sir. Yes.
Yeah. What is the range like? What is the range like? The FD interest rates like?
Around those days, I mean, 3 months back,
Yeah.
I think it was starting from 5%.
Yeah, that's the thing. Now you just now see the central bank. Central bank takes deposits from the banks at 6.5. That is what it means, no? Is it? It's on overnight. It's only overnight. But for a fixed deposit, how should it be? No. Now this is a very drastic and very exceptional situation. So therefore, you need to see how you can.
Oh.
Right. Now there is a drastic situation, and it has to be reversed somehow. Otherwise, now this should, this should really, mm, put some unwarranted things to the stock market. Now, I think nowadays what is happening is the stock market got the indication that in time to come, there will be an interest rate hike. With that sign or with that sense, the stock market already behaved in that manner. Now you can see, the turnover has been reduced, and the prices have gone down, indexes have gone down. So the reason is that. Now this is a drastic scenario where the risk-free rates are now going up. Risk-free rates are now going up. So what is the result? What would be the result? What would be the response? Now people might convert or change their investments from stock market to the government securities. That would be the case, because they would not get a return of this nature by even investing in risky assets. With the investment of risk-free asset, they might get a higher return. So that is the notion. But if the share market is active enough to provide a return which is a reasonable one to deal with the inflation, then people just convert their things into the stock market. So that is what's happening. So the stock market also has a greater role to play here. Revise upwards the caps imposed on interest rates applicable to credit cards to 20%. Right. Now they are doing the other way also. Now they have raised the interest rates for the credit facilities. Earlier it was only lower amount, 15% or so. But now the credit cards also 20%. Temporary overdraft to 18%. And phone in 12%. Now, I think you all have heard about when you talk in terms of inflation, there's a thing called demand pull inflation and cost push inflation. cost push inflation and demand pull inflation. I think both things are now happening. Both things are now happening. In one side, you have to face the demand pull inflation, because there would be a high demand for goods and services with the money supply, higher money supply, lower interest rates, and all that, grid supply. And people try to purchase several things. So that could really enhance the price levels, and that is one type of inflation, demand pull inflation. The other one is with the supply chain disruptions and all, the cost increases will be there, and price increase happens together with cost increase. So then that is what we call cost push inflation. In both sides, the country is affected, both sides. The Monetary Board was of the view that the above measures will dampen the possible build-up of underlying demand pressures in the economy, which should in turn help ease pressures in the external sector, thus promoting greater economic prosperity. At the same time, concerted efforts will need to be urgently taken by the government to complement the efforts taken by the central bank to overcome the present economic challenges. Right, now you can see the other recommendations by the central bank. Introducing measures to discourage non-essential and non-urgent imports urgently based on the previous recommendation made by central bank. Increasing fuel prices and electricity tariffs immediately to reflect the cost. Incentivizing foreign remittances and investment further. Implementing energy conservation measures while accelerating the move towards renewable energy. Increasing government revenue through suitable tax increases. Mobilizing foreign financing and non-debt forex inflows on an urgent basis, on monetizing the non-strategic and underutilized assets, and postponing non-essential and non-urgent capital projects. Now, I think this Treasury reserve ratio also would go up sometimes, because at the next policy level discussion, they would suggest a higher Treasury reserve ratio. Now you can just look at these things. Now we just look at Ccpi, the Colombo Consumer Price Index, and headline inflation year on year. Taking into consideration the Colombo Consumer Price Index, on July 2021 it was 5.7, August it was 6 again, and in September it is 5.7 again, October it is 7.6, November it is 9.9, December it is 12.1, January it is 14.2, February it is 15.1. Now you can see how the inflation has gone up. Now what is the resultant thing in the fixed income securities market or whatever? That also we can see. Invariably the interest rates also will go up. The National Consumer Price Index, they are also, the inflation values are higher. 6.8, 6.7, 6.2, 8.3, 11.1, 14, and 16.8 in January. February one has not been calculated yet. Core inflation is 9.9. Now this money supply and all, you can just look at it. Reserve money, broad money, and you can see money supply has gone up. Broad money. When the money supply goes up, what will happen? You will have a inflationary pressure. Broad money also have gone up. Even the credit to private sector has gone up. So because of those things, the money supply gone that high. Now just look at the interest rates. Now you see the treasury bills. Now that gives 9.95 here. 9.95, 364. Now it's about 1 year one. 9.95 is almost 10, no? Now how you can see now? Now banks pay lower rate of interest. So then what shall we do? I mean, you can just, transfer your savings from banks to the treasury bills in the primary market. Even you can do it for 3 months. 3 months also you get 9.33 here. So that is what you can do. Now just look at the deposit rates now for the banks. Yeah. Our new deposit rates been increased to a certain extent. Hello. Hello. Oh. Sorry. Right, now you can just go through this table of interest rates, and you can have a good analysis on this. Right. With all these things, now you can form an opinion with regard to the future interest rates. And at the same time, you can have an idea on share market operations and future share market operations resulting with increase in interest rate scenarios. So these are the new things which we need to discuss about. So now for the today's discussion, I have taken into consideration the publications of Colombo Stock Exchange, the monthly CSC and the quarterly CSC, and the calculation of all share price index, the all share total return index, and that type of indices, and the way in which the calculation is made. And I think you get a good idea of those things, and that really help you to have a better understanding on the price trends of the stocks. And that would enable you to select very profitable type of investments. You can optimize your returns by doing that. And at the same time, you can see the investments on fixed income securities and how you can gain from that. Right. Anyway, any questions on these things? Any questions on these things? Yes. No, I think when we started our discussion today, we got some idea with regard to the declining of turnover in our stock market transactions, the ASPI index decline, all that. And that was a result of increase in interest rate and the inflation pattern. But the critical thing here is stock market can be, or stock market investments can be considered as some investments where you can get a higher return, which can beat the inflation. But in order to get the investment in that manner, the stock market should be very much vibrant. I don't know whether our stock market has that type of features. But if it is not, we all can try our best and get our stock market into that level. That is what we can do. Anyway, anything you need to comment on? And since someone has asked question about the examination, I just gave you some questions, some examination type questions. And we will have a discussion on some questions also, because examination is also a part of this course, no? So therefore, I think that is also very important. We will do that, and what you need to do is now you can just go through the questions which I have given, and if you have any question, any issues on those things, you can really raise those things at our discussions. Right. Anything else you need to clarify?
So, apart from the examination, do we have separate assignments?
Yes, of course. Yes. and that has to be very diligently done, because my intention is to deliver you some things which you get for your life. I mean, it's a type of a life skill you might get. So that is my intention anyway. And sometimes I really feel very happy. Some of the people have gained it to a certain extent. I think that those people also would improve their absorbing amounts or absorptions from those things. And I will ask all others to do that, because what I can see is very few number of people are actively engaged in this, is even asking questions, whatever it is. So I think all others, I can see about 12 to 13% or 15% are there, but 2-3% just asking questions or whatever. But anyway, others are, even without asking questions, if they engage in an active manner, that would be okay, right? But don't worry to ask any question. Nothing else, I mean, you can do to learn things. Yes. Anything else you need to clarify? Right. So with that, I just wind up the session today. Thank you very much for all your comments, all your active participation, and even for your questioning and all. So keep it up. I think you all can have a good course and a good type of inputs for you, and try your best. Thank you very much.